Hello, everyone. Welcome to Softeq Venture Studio Demo Day. We are excited to have you all here. We have brought these 21 startups on a journey starting in August to where they are today. And I have good news and I have bad news. When they came in August, it took us 4 days to get through their pitches, right? Today, it's going to take right at an hour. So you guys are going to see 21 startups. They come from all over the world. We have them from Iceland, from Europe, from Latin America, and from the US. We have them from the seed stage all the way to the A-round stage. A lot of them are in revenue. I think you guys are going to like what you're going to see. But I want to show you guys how much can change in 1 year. And I would like to thank all of our LPs that are in the audience that have helped make this fund and this venture studio possible in the last year. Chris and I met about 8 years ago and had this crazy idea to start a venture fund only for hardware startups, which was a good idea. Or a bad idea, we're not sure about that one yet. But over that, what we got to where we are today, which is this venture studio model, right? Which is unique, and Chris is gonna talk about that. But a year ago today, this is what our first demo day looked like, right? As you can imagine, we had to beg, borrow, and steal to get every. So without further ado, Chris Howard, the CEO.
Yeah, thanks, Billy. Yeah, so I want to talk a little bit about how we got here, right? So I started Softeq 25 years ago with a focus on what I called technical software development, which meant projects that were interesting to me, which meant the innovation and innovative products, right? So one of my first customers was Compaq here in Houston, also a very famous startup, and I was doing the first PC TV hybrid, combining a PC and a television. Of course, back then that meant a 200-pound RCA monitor, right? And I think a computer running at something around 200 megahertz or something. But it was a pretty interesting project with wireless keyboards and wireless remote controls and putting in the first DVD player. And that's really what my model was for Softeq. And you know, I was one of the startups back then, started out of my house, built the company from there, and just realized that, you know, over my 35 years of entrepreneurial career, that there wasn't a lot of support for founders, especially in Houston. Thankfully, that's changed over the last couple of years. There was only, you know, there weren't any startup development organizations out there, and so what we had was this full stack development services company where we have somewhere around 450 to 500 engineers now worldwide. It's full stack in that it does hardware, firmware, software, mobile, web backend, AI, and ML and data analytics, right, all under one roof. And we've been building products like for the Compaqs and Epsons and Verizons of the world. They come to us, they come to Softeq to build something new and innovative, usually outside of what their normal business model is, and we give them that consulting and that product development. And it occurred to me that, well, hey, why are the big companies, the Fortune 500s that are out there, they can hire anybody they want, but they come to us to do that, right? So why don't we leverage that and use it as what I call a startup development engine, right? So we plug that in. But what the problem was, we had all of these innovative startups coming to us who we wanted to do projects for, but they didn't have any money. So we told them, hey, go off, get some money and come back to us. But we thought, well, if we stand up this fund, actually give them some money, but don't just throw money at them, bring them into something like a studio and leverage our, you know, decades of entrepreneurial experience, mentor them, and then pair them with their 500 engineers to get their POC built or their MVP built or get their app or their product enterprise ready. And that was the idea a year ago. We weren't sure anybody would come into the studio, and we weren't sure anybody would write us a check, but here we are. And we've put 49 companies now through the studio in the last year, and many of them have gone on to raise rounds, and you're going to hear from a couple of them here tonight. So thank you for coming, and I'd like to introduce Julie, one of our startups from the very first cohort, actually.
Thanks, Chris. So I'm Julie Moyer Messervy, and we were in the first cohort just a year ago. It's amazing what you've done in that time. I'm Home Outside, the founder and CEO of Home Outside, which automates and therefore democratizes landscape design for 55 million US homeowners with a $130 billion industry, revolutionizing, I hope. And we're doing this in all sorts of ways, but we're using AI, deep learning, ML. We're using computer vision, 3D things, and we're using that only because we're able to work with Softeq and make our product happen. I've been in business for a while, but to be able to actually work with a team like Softeq and to be able to go deep and broad and make a product, we did the first demo in 3 months, this time last year, and then ever since we've been working with our software engineers, the Softeq engineers, to continue to make our alpha release, and then our MVP is just about to come out. And we've also raised our seed round thanks to Softeq, being able to show what we can do and working with lots and lots of different partners, nationwide partners in the landscape design industry. So I can't thank you enough, but I want one more little thing to say, and that is that Chris and I did a podcast yesterday with his new Forging the Future podcast. I just wanted to show you what I got for my present. Crazy socks on. Thank you.
I am also from one of the cohorts, the last cohort, which hard to believe that was 5 months ago. But since then, we've 5x'd our revenue. My company is Mallard Bay, and I'm Logan Meaux, the founder and CEO. And our company creates unforgettable experiences at a click of a button for the hunting and fishing industry. And the thing that amazed me about Softeq and the program that we went through was it created the momentum that we needed to raise and close a $1.8 million funding round in September. And it is hard to believe that I was standing right here, but the thing that you guys in the audience can offer to the companies that have worked so hard to be up here is to take a bet on them and take a leap of faith and potentially fall in love with one of these companies that come up here today, just like I've been so fortunate to have investors fall in love with my company. And so I'll hand it back to the Billy Grandy.
Thank you, Logan and Julie. So today is going to go really fast, right? They're 3-minute pitches. They all stay on time, except for maybe 1 or 2 of them, and a few go short. So it should take just right at an hour. Afterwards, Joel's going to come up and talk to you guys, but everyone's invited to Fleming's. Please come to Fleming's with us. We're going to have happy hour and then dinner. You can come for any of it, all of it, or whatever you want to do, right? But the magic happens after this, right? You all are going to learn a little bit about what they're building, and you're going to go over to Fleming's. You're going to be able to spend time and learn about the founders. Because one thing I'll tell you is all of their ideas are good, right? But the founders are great, right? And founders are what build companies, right? So afterwards, you're going to spend some time with them. But I want you guys, while you're sitting through these pitches, think of 2 things. They all need 2 things. Some of them need money, and they all need customers. So as you're sitting there, think about who you know in your network that you can connect them with, that maybe you can provide the money, but someone you know can provide the customers or vice versa. So think through that, right? Because they all need help, and they're all changing the world in their own unique way, right? So without any further ado, the first startup is IncentiFind.
Hi, everyone. I'm Natalie Goodman. I'm the founder of IncentiFind, and we're the nation's go-to database of green building incentives. Now, I know everyone here is going to agree with me when I say that found money is a beautiful thing, especially when it's in the billions. Our team of experts designed an incentive database that's worth $70 billion per year. Now, the good news is that $70 billion gets reset every year. The bad, $35 billion goes unclaimed each year. Why are property owners leaving so much money on the table? It's simple, really. These incentives were not easy to find or capture until IncentiFind. We are the nation's first and only database to make all green building incentives searchable and easy to use. And to connect property owners to these savings, we simply integrate our data into the software that property owners use every day. We target prop tech companies who finance construction projects, they design buildings, they maintain real estate, they construct buildings. These companies purchase annual subscriptions to access our database so that they can provide our data to their end users who are all property owners. There's $18 trillion worth of work to be done before our homes and buildings here in the US are green, efficient, and up to code. And an opportunity for IncentiFind to work with 10,000 prop tech companies. Now, IncentiFind is only servicing one of the 4 segments of prop tech you saw me present. This is because not all of our products are fully developed, but by the end of this year, they will be. And our revenue will accelerate because we get to service a backlog of prop tech companies that we accumulated. Now, prop tech companies, they're beginning to quickly see the value that we bring to both their software and their end users. We know this because we've accumulated a backlog of prop tech companies worth $11.5 million in ARR that we must service. Further, our backlog's quarterly growth rate is 24% without paid marketing campaigns. When you combine our value and this growth rate, IncentiFind can service 5% of our target market in just 3 years. This is why we opened our seed round. We're at 45% in commitments from investors. Essentially, IncentiFind found $70 billion to throw at an $18 trillion problem. Honestly, who else can say that? IncentiFind helps people find money. And we're hoping a few of you here will return the favor. Thanks so much.
Hi, I'm Alex, and I'm here today because of a fundamental truth that we all live by, and that is picks or it didn't happen. I grew up in the world of action sports, and if you're unfamiliar with this industry, it's one that's powered by picks or it didn't happen. The global market for these sports has exploded with the advent of social media platforms. In fact, since the launch of Instagram, it's tripled to over $50 billion. The thing is, trying to capture quality media while you're skiing or mountain biking or skateboarding is pretty hard to do. You either need a point of view camera like a GoPro, which still doesn't get you in the shot, or you need someone else with you who knows what they're doing and is willing to wait on the sidelines. I'm betting a few people here have been skiing their entire lives and don't have a single photo or video of themselves actually skiing. It's the reason I'm here today, and it's why I'm thrilled to introduce you to Hightag. We've built a smart camera system that's triggered by these RFID tags. When an athlete with one of these rides by, our capture points automatically snap photos or videos of them and then instantly deliver that media to their Hightag app. So instead of paying for a photographer or a new camera, Hightag users pay to activate their tag and then are ready to start capturing all of their action shots at all of their favorite spots. Okay, so far we've talked a lot about the athletes, but let's zoom out a little bit and talk about the venues who we're partnering with to install these capture points. For them, Hightag provides some really interesting benefits. You see, by giving their visitors the power to easily record and share their experiences, we're turning their visitor base into an organic promotion engine. I'll share a bit of insight we learned from the director of Vail Resort's photo business. Every year, Vail staffs 100 photographers who take 2.5 million photos, most of which never actually make it into the hands of their visitors. But they also discovered that every Instagram post from one of their visitors sharing content from their ski trip generates the same revenue impact as $5 in direct ad spend. Let's zoom out a little bit further. We are giving athletes a compelling reason to carry an RFID tag while they ride. So think about what that means on a broader scale. Beyond just capturing photos and videos, we're capturing the journey of the athlete as they explore the world around them. For venues, that means we can provide unique insights about who their visitors are and where in the world they ride, down to even the specific trail or feature. All combined, we're giving these venues both an exciting experience for their visitors and the tools and insights they need to drive new visitorship and higher rates of repeat visits. Now, there's a lot of ground to cover here, but ultimately a lot of opportunity for Hightag. Next month, we'll begin installing the first dozen capture points in the Oz Trails of Northwest Arkansas, also known as the mountain biking capital of the world. In the following months, we'll begin pilot testing at Woodward, a world-famous action sports training facility. We'll launch Hightag there for the upcoming summer before expanding to other Woodward locations and other ski resorts owned by Powder, Woodward's parent company. Today, we're raising pre-seed capital to launch Hightag in these first 2 venues over the next 8 months. We're looking for investors with expertise in the outdoor recreation industry, in building community or IoT-based businesses, or those who just want to finally capture a good shot of themselves skiing. If that's you, come find us at the showcase, join us, and be a part of the action. Thank you.
Let's talk about music. Music has shaped most of my life and my career. I'm born and raised in Austin, Texas, the live music capital of the world. I taught myself guitar and music production over the last decade. That song you just heard as I walked in was actually produced by me as well. Now, I've always done it as a fun hobby, but everything changed when I started managing other musicians and learning the business side and really understood the music industry. And what I realized is that music streaming, social media makes music discovery great for all of us, but not the musician. Out of $43 billion a year generated by the music industry, musicians only receive 12%. 12. All of these companies are taking their cuts, and there's too many middlemen that are allowing musicians to actually thrive. Now, what we're trying to do with JamFeed is allow musicians to build their own business and connect directly with fans. The reality is, musicians have no idea who their fans really are. For example, artist I manage has 100,000 monthly listeners on Spotify every single month, and he generates $800 a month from 100,000 customers. Not only that, but they control the customer data too, meaning most musicians have no clue who's listening or buying their tickets. And I believe none of you would invest in any company here if we didn't know who our customers were and how to reach them. And that's why we're building JamFeed. We're making it super easy for artists to build their own business and connect directly with fans. In less than 2 minutes, we can build any artist a website that automatically updates every time they drop a song, release a video, and all they need to do is copy and paste streaming and social links. It's super easy. Come over to Fleming's later, and I'll show you how simple it is. Not only do we build them a website, but we actually are building all of the tools in one platform for them to build their entire online business. E-commerce, marketing tools, analytics, everything in one place instead of having to learn multiple platforms and pay for multiple services. Our business model is simple. It's $25 to $100 a month for every individual artist, and we grow with them as they grow, their fan base. The market that we're in is one of the fastest growing markets in the world. The creator economy is growing at a staggering rate. There's over 8 million musicians on Spotify today and over 200 million creators. Not only can we start with music, but our patent actually allows us to expand beyond music into other creative markets, such as podcasters, comedians, and other creators as well. The competition consists of a bunch of big billion-dollar businesses, and we love this. Why? Because they're already leaving those companies and coming to JamFeed and paying us for our services, because we're simple, fast, and specifically built for musicians. We've raised over $650,000 from 25 individual angel investors, Softeq Venture Studio, and we also had a music management company in Nashville, Tennessee, invest in our business after bringing their artists over to our platform as customers. We'd love for you to join our investor team. Our core team is made up of musicians, artist managers, music industry executives, and our CTO has been at some of the top tech companies in the world running their engineering departments. My name is Cameron Gibson, and I introduce myself last because my mission has always been to put the musician first. Thank you.
Imagine a smart retail platform that allows you to combine a physical and virtual retail experience. Imagine a platform that democratizes convenient, affordable, and sustainable retail no matter where you shop. That is the future of retail. I am Fernando, the CEO of Boxes, and this is a picture of my father. Since I was 7 years old, I grew up working with him in the retail industry. And now, with my team, we are ready to revolutionize it. We are powering the future of retail with 2 use cases. This is our first use case. It's a device where we can market or sample CPG products by utilizing gamification and convenient placement to replace the need for additional labor and shelf space. At the same time, we are allowing retailers and brands to gather data from consumers' interaction with our devices, gaining insights into consumers' preference and behavior. And this is an example. You scan a QR on the screen of the device with your smartphone, you go into a survey. In this survey, we can ask you questions to understand consumers' preference, to build brand awareness. Our goal is to understand, for example, purchasing intent and purchasing patterns. And after completing the survey, you are going to get a free sample. Since we started, we have already produced over 100 devices of this solution and partnered with multinational companies such as Unilever, XC Johnson, Kimberly-Clark Corporation, and the Minnesota Twins. We have also developed a web platform, and from there, our CPG partners and retailers can log in with a username and a password, and they can check out the status of every single device remotely, adjust advertising and content to create targeted messages, see the data that we are collecting from consumers' preference and behavior. What is coming? In 2023, we will launch new devices for 2 top Fortune companies, and we are also developing our second use case. What is this? A new refilling device, where we are innovating to bring a sustainable approach to brands, retailers, consumers, and our planet. Our team, Boxes, is made up of software and hardware technologies, financial experts, and experienced brand builders. We are building a platform that offers brands and retailers throughout the world a solution to customer engagement, data capture, affordability, and sustainability. This gives us access to innovate in a $1 trillion CPG market in the Americas alone. Our ask, we are launching our $1 million seed round to go from 20K monthly recurring revenue, where we are right now, to 80K monthly recurring revenue in 6 months. Some of our great partners, we are backed by Techstars, Greentown Lab. 3 months ago, we received an investment from Google, the Google Latino Founder Funds. We are working with NVIDIA, Capital Factory, and of course, Softeq. Thank you so much.
Hello, I'm Todd from Adkaddy. We are reimagining the consumer-brand relationship. At Adkaddy, there's 230 million US consumers or US shoppers that use their personal email to stay connected to brands. Brands also use email as the #1 channel to reach their audience. So what's the problem? 90 billion of these emails go unread every single day. 90 billion, it's 85% of the emails. The reason being is consumers love brands, but they hate the interruption. So enter Adkaddy. We're changing how the experience works for the consumer and the brand. So the first thing we do is we connect into your Gmail, and we pull all brands out of your personal inbox, and we move them into Adkaddy, a standalone platform. We call this the magic moment, where your personal inbox becomes personal again. The second thing we do is we give you a brand new consumer email address, so your name at adkaddy.com. Now that all this transition has happened, comes into our app, where we have a really fun experience for the user. Think of this in 3 different ways. The first way is the brands that you love. These are brands you want to see everything that they send you. So we put this into our feed, which is an Instagram-like feed where we take snapshots of the emails and make it fun and engaging to look at those emails. Think of this as like a personally curated magazine of all your favorite brands. The next place is Adbox. Adbox allows you to connect with a ton of brands. I have over 500 brands inside of my Adbox where I have access on demand. There's no longer a concept of inbox 0 or 20,000 unread emails. We've destroyed that concept. So now you have Adbox where you have access on demand when and how you want it. You're in control as the user. The last piece is around spam. And unfortunately, this gets married into the other parts of brands that you actually love, and that's the problem. So we separate this, and we're the first app in the United States to be GDPR and CCPA compliant. What this means is you have to double opt in and allow brands into your ad box or Adkaddy at all. And once this happens, you're in full control, okay? All this technology is completely built. We have 70,000 downloads to date, and we process about 1 million emails a week for our consumers. We also have a Chrome extension, so you can have access on demand not only on your mobile phone, but in a laptop computer. Consumers love the app. We have almost a 5-star rating on both app stores, and what happens here is you really kind of change the paradigm for the consumer. The first feedback I usually get from people that download that don't know me is I actually enjoy looking at brands again. So this isn't just another app, another platform. This is really a cultural movement of giving control of advertising back to the consumer. Because remember what I said, consumers love brands, they just hate the interruption. And by removing that interruption and giving them back control, they will willingly engage and have fun doing it. Those engaged users are highly valuable. So at $200 and $250 a piece, we're allowing them to come into the platform, and we pay less than $3 to acquire that consumer. My name's Todd Furneaux. I'm the founder and CEO at Adkaddy. Along with my business partner, Gagan, this is my 4th startup. I have 50 patents, and I put in $300,000 of my personal money to get this thing moving. Gagan has 25 plus years experience in deep technology, and we're raising $1.7 million to grow this to 500,000 users and profitability. I look forward to talking to y'all later. Thank you.
Good afternoon. My name is Mark Alexander. I'm the founder and CEO of Motusi Corporation. We're a digital health platform revolutionizing movement health for athletes and professionals. We're bringing the lab to the field. Movement professionals today, as well as athletes, are requiring data for specific outcomes and data-driven care provided along with intuitive insights, whether you're recovering from an injury or whether you're actually optimizing your performance or seeking peak performance. The market that we're addressing is the $7.2 billion US PT market. Once we've accomplished and conquered that, we're going to take on the $110 billion global market. How are we doing this? Well, we've actually created and deployed a full stack solution comprised of a wearable technology embedded with our on-body area network, capturing data at 200 frames a second in the real world, translating that to a mobile application utilizing augmented reality and a digital twin, an avatar, if you will, overlaid with clinically relevant data that allows the professional to assess the patient to understand their condition, their health condition, their movement condition. All the data is HIPAA compliant, sent to the cloud with dashboard and reporting provided through Motusi's cloud service. We are a B2B subscription service. Why are we different? Well, we're really different because we're providing the holy grail of data to professionals, and that is forces, loads, and acceleration profiles for the athlete. That's ultimately what professionals want to improve upon. What our customers say, we're helping them make more money. We're helping them be efficient at patient care. We're actually helping them reach patients where they are. How we doing? Well, what we're doing is really well. We've got clinics, over 100 aggregately. We've got a signed 5-year agreement with a pediatric hospital to apply what we're doing in movement health to children. And we're testing in sports academies, with the military, and with universities as an expansion opportunity beyond 2023. Super pleased that we're FDA registered. We filed IP. We've got distribution agreements, generating initial revenues, and partnered with world-class companies like Bosch, Intel, AWS, and Softeq. We don't do this alone. As founder and co-founder in the audience, we have an amazing team, small but mighty, 12 people, a movement science team that is world-class, and advisors, 6 specifically, that have helped advise us along the way and will continue to do so. We partner with these companies to help drive our innovation and move our product and platform forward. So what am I asking? We're seeking $7 million of additional investment to the $3 million we've already raised in our Series A. But what I'm really asking is not just to help us execute on our plan and drive revenue, but I'm asking you to invest in your own movement health by investing in Motusi. Thank you very much.
My name is Emmanuel Joel, a retired captain in the fire department, founder and the CEO of RESCUNOMICS. 2 words describe first responder tools: unacceptable and fixable. Unacceptable is my captain calling out for help at a house fire years ago, but we just couldn't find him. Unacceptable is that 1,000 lives have been lost in structural fires in the last 30 years. Unacceptable is that only recently in Rivalry, Texas, where rescuers got on scene without even a floor plan. Now, no rescuer should get on scene and then make a plan. That's a waste of precious seconds, and seconds cost lives. This is fixable. Geofencing exists. Floor plans do exist. Now, with the Heroes app, rescuers can now view digital blueprints of a building before they get there. Victims and rescuers can now be tracked up to 1 meter with 0 latency. With the Heroes app, rescuers can now use it even in wildland firefighting. Our assistive AI services provides mission-critical data to first responders on scene for optimized decision-making and to save lives. With a total addressable market of $2.2 trillion, and our primary target market being first responders, government agencies, school districts, and high-rise building owners with about 8.7 million tenants. At $1 a month and at $5,000 for our enterprise services, we provide geolocation services to them. We're currently launching a pilot in Raleigh, North Carolina, with 1,200 rescuers currently using them, and a second paid pilot in Orange County, California in Q1 of 2023. Well, we have projections of about $7 million in the next 2 years after the pilot has been completed. And I'm also proud to announce to you all that we are Tier 1 winners of a $8.7 million award by the Department of Commerce and the National Institute of Standards and Technology. We're seeking $1 million to scale into all 52 states of the country, new hires, of course, and of course, R&D. We have a great team behind us, from Dave Matthews from Softeq, Danny Parker from Stanford, and with your help, we are poised for success. Consider this: the life you save by investing in us might be your own. Thank you.
Hi everyone, my name is Dan. I'm CEO and co-founder of SpecsX, and we provide eye care anytime, anywhere. So I'm here to tell you about a crisis that exists in eye care today, and that's a crisis of access. And nowhere does this become more prevalent is in rural and remote communities all over the world. I can guarantee you today a child has been diagnosed with a learning disability simply because they couldn't see the whiteboard. It's not fair. In fact, uncorrected vision is the world's leading disability. At SpecsX, we believe access to eye care is a right. It shouldn't depend on your zip code. So how do we do this? How do we do it differently? We combine live pop-up clinics where we send doctors into remote and rural communities for week-long clinics, and we follow it up with technology, with leave-behind technology, kiosks, and mobile technology to create recurring revenue after the doctor has gone. Those clinics generate $80,000 a week because of the high volume that they're driving through those week-long pop-up clinics. So we're combining the most advanced digital eye platform to create a win-win-win scenario. The patients win because they get access to eye care where it didn't previously exist. The optometrists win because they get more revenue and more patients. And our payers actually win because they get to lower their cost and finally serve healthcare deserts that have existed within their portfolio. We're operational today. We have 23 kiosks deployed in the last 5 months, and on average, they become cash flow positive in just 2 weeks after we put them on the ground. We've also signed 10 pop-up clinics in the last 10 days for 2023. This is a big market, and we're operating in 3 specific verticals, but today I want to tell you about one that's very near and dear to my heart, and that's the First Nations community across North America. And the reason we're focusing on them is there is government-funded eye care that is not being tapped into because of the access issues I'm talking about today. So the money's sitting there. Doctors aren't going into these communities because there's no way to really get them there. We're sending them there. That's 10 million underserved, 10 million too many. So it's a big opportunity. Over 5 years, we're looking at 81 million in cumulative revenue, and that's just serving just 3.5% of this market. And it gets better for the investors in the audience. In year 2, we begin paying dividends. Year 4 is your break-even dividend. We have the team with the vision, no pun intended, and track record to execute on this project. We've got the operational, optometric, and executive experience to deliver. And I want to center out, give a shout out here, the guy in the middle, Dr. Tim Degelman, who has been operating pop-up clinics for the last 30 years in First Nation communities in Canada. What we've done is taken his model and we've scaled it, we've made it a little bit more profitable, and guess what, everyone? Eye care is recession-proof. So we're looking for $1.2 million to help us accelerate our efforts and throw some fuel on this fire. Thank you.
Some say that life is defined by experiences. This couldn't be more true than in the world of sports. Ask any athlete about the importance of playing in front of a sold-out crowd or packed stadium. They'll tell you there's literally nothing better. The energy that exists between today's athlete and their most dedicated fans is priceless, something my co-founder and I have had the chance to experience firsthand. However, despite what the athlete-fan partnership bring to the table, big businesses, organizations, and powerhouse teams and leagues have traditionally been the primary benefactors of these highly credible interactions. But the landscape is changing, and a new era of technology is responsible for setting the stage for how we are set to interact in the years to come. I'm Phil Mangan, founder of Struttur Sports, an NFT-based membership platform that brings together today's athletes and their most dedicated fans to create unique digital and in real life experiences. In simple terms, our DNA is to bring the most incredible experiences in sport to everyone. By using this method, we can build a home where athletes and fans can own the value of their connectivity, a place only made possible due to the infrastructure of blockchain technology. But here's the thing, you don't need to know exactly how blockchain works to get what we're doing. Just know this. First, we provide something that everyone is familiar with, a ticket. However, it's so much more than the ordinary tickets we're used to. It can provide access to both digital and in real life events. So getting to meet your favorite sports icon in real life or getting a never before seen footage of digital content. It can provide scarcity, incentivization, and liquidity for both the athletes and the ticket holder to benefit long term. Think of it as a lifetime pass that creates endless opportunities long after the day you purchase it. For us, our job is to manage and scale these offerings for fans to purchase memberships. From there, our platform enables seamless token-gated commerce to earn a commission from every experience sold. In just the first 12 months, we project to do $1.2 million in revenue from the launch of our initial partnerships. But what's really important to note is that this year, This year's investments in NFT projects have already surpassed the $27 billion VC spent in 2021, a clear indication that the technology is moving beyond the use cases of just digital art and collectibles. On top of that, the fan experience sector was the #1 funded category in sports tech in 2022. But today we remain focused, and we announced the launch of our pre-seed round of $750,000 to scale our product and continue the development and build a team around launching our communities. Lastly, I'd like to leave you with this. I personally believe, and I've seen it, that sports has the ability to bring together individuals, communities, and cultures like no other. When you mix our connections to athletes in the NFL, PGA, National Lacrosse League, and MLB, and many more, with a technology that creates new economic business models and diverse revenue streams, the possibilities are truly endless. Thank you very much.
MyShoots is like a bullet with precision target marketing whilst bringing the world of gun sports together. I don't claim to be a shooting industry expert. I have an advisor in my team for that. But whilst I was a sales agent for a well-known brand of shooting and hunting clothes, I witnessed many problems within the market. For example, the lack of sophistication in distributing the product to market. I was witnessing the censorship of the current social media platforms within this niche. And whilst going in and out of gun shops and ranges, I was witnessing it being time-consuming to organise shoot dates and events and difficult to purchase them due to there being too many communication channels to do it through. Every country has their way of regulating this sports sector, and in the UK, we issue 1 million shooting licences per annum, and in the US, you issue 39 million hunting licences per annum. The shooting community is made up of many people from different walks of life, but there's a high percentage of high net worth individuals that the luxury brands would love to be able to tap into. But these individuals would also want to maintain their privacy. Why come to the US? Well, you have a market that's 10 times the size of the UK. And these tightly knit, status-minded group of customers love to gear up in style by spending 20 billion per annum on goods and services in the UK and US. So the opportunity is a platform for gun clubs to connect with their members while allowing brands direct access to this tightly knit, status-minded group of customers while still allowing the clients to maintain their privacy. It works by every club having their own section in the app, and the value proposition to the club is they haven't got to have their own app built. They're saving on their yearly marketing and CRM costs, whilst the brands gain traffic to their own online shops, but the clients still maintain their privacy. MyShoots competition is much more technical based. Nobody is splitting the demographics like MyShoots. I have a strong team around me. MyShoots has its own CTO. I have my own industry advisor for the US and UK. I've been building a very strong team of affiliates from all disciplines of shooting and within the businesses within shooting. MyShoots has received £30,000 worth of UK government grant funding, and that is made up of Innovate UK to make me investor ready, market research, business plan, the IP office did an IP audit, which won me my IP access grant, which trademarked it into 5 classes in the UK, put a contract in place to bring the brands and businesses on board. Then I won my Staffordshire Business Innovation Grant, which has built the low-code MVP. Then Staffordshire County Council have paid for the latest 5-year financial projections. And now I'm in the NatWest Business Bank Accelerator at Warwick University and in the Softeq Venture Studio. By being in the Softeq Venture Studio has allowed the low-code MVP that West London Shooting School have been piloting to now be coded. I predict my revenue to be £1 million in year 3, 9 by year 5. My ask is 1.2 million, and the use of the funds will be tech, team, and marketing. MyShoots will be brought to an exit once the mission is complete. I'm Georgina Bowman, CEO and founder of MyShoots, and I would like to start a conversation with those who are interested in investing in a multi-billion-pound affinity market that's long overdue a digital transformation. MyShoots goes live in January 23. Thank you very much.
Good evening, everyone. I'm Anthony Gant, United States Marine Corps retired after 22 years. And during that time period, I moved over 17 times. As I did that, I decided to grow a family. I went from 1 kid, 2 kids, 3 to more. I ended up having 6 kids at the end of my baby making operation. During that period, I learned that it was very difficult and hard to move 1 person, 3 people, 8 people every 2 years. We went from staying in hotels to realizing that there was a huge opportunity where we can stay in a home and be comfortable. Well, in 2018, I realized that the government has regulations which says you cannot use Airbnb. And I was like, oh my goodness, oh me. I ended up losing $1,200 for that operation. Just staying in a home that was comfortable, and my wife was like, I'm happy. So I was happy. I started doing some research, and I learned that I wasn't the only service member or government employee that faced this issue. Over 500,000 service members and their family travel every single year, and many of us were using platforms where we could not get reimbursed. And then I also looked into the situation and found out over 5 million homes in America were missing out on an opportunity to host our heroes and their families and make a lot of money in doing so. So I created a solution called atease, which allows people to use a home that's on other sites, but is vetted, verified, and they can host our heroes while making money. Again, the government spends nearly $5 billion every single year. We do this really simply. We inspect each and every property. We vet the property manager because we want to make sure they're not bad actors, i.e. terrorists, drug dealers, and human traffickers. And then we vet the travelers to make sure that they served in the government, whether that's at the federal, state, or local level. And then in addition to that, we also charge 10% on each booking. While on active duty, I started this in 2019, and I was by myself, but I was able to capture a lot of opportunity where I built the first platform because I have an engineering degree in electrical and a little bit of computer science. And then I was able to capture my first initial properties, help a lot of Marines and their families stay in places where we generated revenue over revenue and revenue. So much so that I put in my retirement papers and retired in July of this year. After doing such, I was able to start hiring people who are much smarter than me and had the same background as I do: veterans, military spouses, and military dependents. We also looked at who can help us get this off the ground. And if you look at the bottom, we have Brian Sharples, who is the co-founder of Home Away out of Austin, Texas. And we have a retired brigadier general that understands the fiduciary responsibilities of the government. Today, I'm letting you all know that I'm raising a seed round of $3 million. I've already raised $1.1 million, and I'm looking for more people to join my team so we can help put our service members, their families, at ease.
Ladies and gentlemen, my name is Octavio Dubois, co-founder of Mesada, and we're in the money transfer business. When you work hard for your money, that money is yours. It's yours to spend, save, or share, except when you need to send it to another country. Money transfers to Mexico are a $59 billion business this year and expected to grow to $62 billion next year. These transfers represent the second largest source from income for Mexico. We are ranked behind India, with a tenth of the population. Sending money to another country today is slow. It takes an average of 3 days to get the money. It's expensive, added cost and fees, and it's fussy. And what I mean by that is that you don't always know what you're gonna get. Allowance, Mesada means allowance in Spanish, and we allow our clients to send money faster, clearer, in a cheaper way. They always know what they're gonna get because of our blockchain technology. We allow our customers to get on board with a few clicks and send and receive money in a matter of minutes. We talk to 5 million of young immigrants. There are more immigrants now sending more money back home. Fintech in Mexico has exploded, but in the remittance scene, little has changed. Competitors there just don't work or they can't deliver. We have 5,000 operations in any given time. We have a repetitive base of customers, and we have we have a slightly above average ticket per consumer. Our go-to-market, we have a better proposition. We work with immigrants, influencers, and immigrants associations to gain their trust, and we're doing so. We're becoming the brand for their choice. This market is huge, but we want to focus on the immigrant business. We have traction. Oh my God, sorry. We have traction. Our web page and our app is working and doing business. We are seeking for $750,000 to become part of Mesada, to help people provide for their families, and yes, to be part of a growing, profitable business. As I told you, Mesada means allowance, and we hope you allow us to become part of your portfolio. Thank you.
Hello, I'm Ryan Anderson, and I'm the CEO of Loved. If you'd humor me for a little bit, I'd like you to think back to something that you accomplished that originally terrified you. Maybe it was diving, swimming, or even starting a business. At some point, you got comfortable with the idea that you accepted it. It was most likely baby steps that got you there, and the inevitability of it made it somehow just a little less scary. Once you got over that fear, you took action. Inevitability, courage, action. So why can't we do this with death? Well, we have no idea when, where, or how we'll die, so in our minds, we won't. At least not today. And so we procrastinate. It only takes a flash of the word death across the screen, and we become altruistic. We want our love to endure. Does our name make sense now, Loved? Loved is a gentle, consistent hand helping you make decisions now while you have time. In technical speak, we enable pre-collaborative, post-life decisions through commitment management. We're building a platform that not only helps you make decisions in the face of fear and procrastination, but also unlocks synergies across several end-of-life preparation steps. It's not just about wills and trusts. Think about all the things that you manage in your daily lives. Usernames, passwords, your accounts, your responsibilities, your money, all your stuff. Do any of us know what to do if everything suddenly changed in an instant? Over 50% of people die without a will, and over $32 billion of inheritance is just wiped out because of a lack of preparation. And settling an estate after the fact is an endless nightmare of legal and financial decisions. How is this not solved yet? We reject this completely. Our strategy is to leverage human psychology with a gentle, steady, simple, and complete approach in the same way that you overcame your big scary thing, baby steps. We aim to assemble all end-of-life services in one place, enabling our customers to move on with life, knowing that their affairs are safe, secure, up-to-date, and compliant by state. Along the way, we capture stories, final messages, and social posts. We believe this is a $60 billion market opportunity, which is as a platform play. This is a small percentage of what's spent overall in this domain. We target customers at key inflection points in life, such as the birth of a child, military deployment, and retirement. And we, excuse me, and we are assembling an ecosystem of estate lawyers and funeral homes that not only serve our customers, but also drive demand generation for us in this ecosystem. This is a highly fragmented market. Competition is predominantly small mom and pops, vertically focused. A recent survey indicated that over 97% of respondents have yet to see a like offering to this, and that over 7 million would subscribe today at $100 a year if given the chance. Loved is a subscription platform offering 1 to 3 year terms with family plans available to extend our reach to the elderly generation. And yes, we do have marketplace add-ons. We're seeking $500,000 investment to help us bring this to market. I have 25 years experience as a software developer and senior business strategist for the Fortune 500. This is a ripe market for platform play. I'm excited for it. My co-founders are a successful tech entrepreneur who's exited over $500 million so far, and an experienced attorney. At Loved, we say face the darkness, stare it down, and own it. We invite you to do the same with this investment opportunity. Thank you.
What you just heard are the voices of more than 20,000 people in 15 countries of Latin America whose health we've been able to improve in the last year. My name is Jaco Lustan, and I'm CEO and co-founder at Hello Doctor, and I am from Mexico. Unfortunately, our healthcare system is completely broken. 92% of the population only have access to public healthcare, where it takes up to 4 days to see a practitioner. And once you manage to get a prescription, 37% cannot get it fulfilled because of lack of medicines. The health of a country cannot depend on a system like this. So people have to pay out of pocket for their care in small private clinics and hospitals. So at Hello Doctor, we flipped the script. We hired the doctors and pay them per successful consultation. They in turn take video and chat appointments where we provide end-to-end care from the first symptoms to delivering your prescriptions and labs right to your door. A challenge is that virtual healthcare is still very new in Latin America. So building loyalty and trust is key. So people see Hello Doctor as their first step into healthcare. For that reason, we removed all the possible barriers. And today, only with your smartphone and internet access, you can have a consultation with a general practitioner, a psychologist, and even a veterinarian. And you can do this for free over and over again on a seamless experience through Hello Doctor. With this core service, we've been able to double our user base every couple of months, where we've been able to acquire more than 40,000 active users in the last year. And we have secured contracts with Lilly and Pfizer, two of the biggest pharmaceutical companies in the world. What's amazing is that this core service only costs us $3 per consultation, and it's completely sponsored by the Hello Doctor Foundation and its benefactors. We then monetize by cross-selling different services to the patients, like selling them prescriptions, lab tests. They can pay for follow-up consultations with specialists or sign up on different health subscriptions. And their conservative projections show that by 2024, only from the mental health and diabetes subscriptions, we're going to be able to generate significant revenue to reach a $15 million valuation. And this is only from the subscriptions revenue stream. So the potential is huge. We have found initial product market fit and are bound to become the first mainstream healthcare marketplace in Latin America. We believe healthcare is a human right, and it is time to make it a reality. So my co-founders and me would love to chat with you a little bit more on how we're going to be able to add capacity to meet our growing demand. Say hello to the new face of healthcare in Latin America. Thank you.
Hello, everyone, and thank you for supporting this quarter's Softeq Venture Studio program. My name is Jeremy Henderson, and I'm the founder and CEO of the sports science and technology company, Synergy 7. I am also the inventor behind what will be a long and deep line of performance wearable devices that will change the face and pace of sports through motion measurement and data. Now, we all know that the definition of insanity is doing the same thing over and over again and expecting different results. Without insight and data, that's the definition of sports too. Repetition with the hopes of reward. So what's stopping us from improving faster? Insight. The sports and fitness industry has access to cameras and insanely funded labs. But the athlete playing ball this Friday in small town West Texas does not have that type of access. So we are declaring an end to the insanity. We say, unleash the insight. Our Sparta data platform allows athletes, parents, and coaches to use our data to track, improve, and showcase their athletes' quickly growing skills. The Sparta data platform is key to our overall strategy and will greatly impact and benefit the entire sports ecosystem. Now let me introduce to you our inaugural performance wearable device, the J-Sleeve. The J-Sleeve is a smart basketball shooting sleeve that interfaces with our mobile application to send data to our Sparta platform and help the athlete diagnose flaws in their basketball shooting jump shot.
The J Sleeve will also create the opportunity for athletes to improve their overall performance by providing insight to correct that jump shot. The J Sleeve is the first of what will be a long and deep line of performance wearable devices that will digitize the true action of all sports. Demand for the J Sleeve is high. We have $500,000 in pending revenue that will equate to $1.4 million in lifetime value. The sports ecosystem loves this as well. From the amateur to the pro, from the player to the coach, our J Sleeve and Sparta Data platform is already exceeding our near-term expectations. Now, the sports and fitness wearables market is already massive and doubling in the next 5 years. Specifically, as it relates to basketball, there are 450 million people who play the game worldwide. And in the US alone, there are 10 million people. So at our affordable pricing, our serviceable market is robust. Competition in this space is small, and Shot Tracker is our largest competitor, but they have recently pivoted to facility and infrastructure build-out. Our difference, we capture action wherever you can bounce a ball. Our management team is phenomenal, and we have every core aspect of our business covered with industry experts, and we have the vision to capture and maintain the competitive advantage to win. As I said at the start, Synergy 7 is changing the face and pace of sports through science, data, and technology, and we are raising $1.5 million and look forward to working with strategic investors to help us grow and scale our business. Thank you.
Good evening, everyone. I'm Rika.
I'm Tiffany.
And we're the founders of Allkind. Tiffany and I met when we were both executives working at a fertility center. We saw behind the scenes of this rapidly growing $39 billion industry. It's a broken, antiquated system full of millions of people that can't have the one thing they want most in this world, a baby. Jason and Janine are a couple that we worked with. They had gone through 5 years of unsuccessful IVF cycles. It's brutal emotionally, physically, financially, and now they're hearing those dreaded words, that they can't have a baby on their own. Jason and Janine need third-party fertility. They need a donor or a surrogate to have a baby.
But they are not alone. 1 in 4 people struggle with infertility globally. Fertility clinics today are challenged with 400 parents to every 1 available surrogate. This has led to a 2+ year wait list before aspiring parents are even able to start their family building journey. Additionally, fertility specialists are spending hundreds of thousands on ads that are unsuccessful in recruiting the people who play a vital role in this process, the donors and surrogates. We knew we could do better, and it turns out we were right.
Now everyone joins Allkind. We've created the world's largest network of available and qualified donor and surrogate candidates, finally bringing together fertility specialists, aspiring parents, donors, and surrogates all on one centralized platform, creating the next generation of life. By making the donors and surrogates the heroes of our story, we've kept our cost of acquisition incredibly low and the volume of incoming candidates very high.
Following the CDC and American Society of Reproductive Medicine guidelines, we've successfully become the world's largest network, recruiting over 65,000 engaged and highly qualified donor and surrogate candidates. Our technology helps move this process from 2 years to 2 days, increasing the throughput for clinics that partner with us, adding millions more to their bottom line. We have 3 primary sources of revenue: direct sales, our enterprise monthly subscriptions, and our referral program. Our go-to-market is both B2C via our beautifully designed app and B2B, working directly with clinics across the US.
Prior to our app launch, we were able to generate $60,000 in just 2 months of manual matchmaking. Our tech has really advanced in this space as well. We were able to keep this cost of acquisition incredibly low and the volume of candidates high with our team. We have extensive fertility experience in tech and building startups. We have the modern solutions to the challenges that we have faced today in fertility. So join Allkind and invest in the next generation, creating life.
Business has no idea how to value nature in their decisions. This is a concern because more than half of the global economy is dependent on nature. That's $44 trillion. Shareholders and regulators are pushing companies to measure and disclose their impact on nature and biodiversity. At Svarmi, we have spent years building a smart, digital, and scalable software solution for nature impact assessment. Our solution allows companies to locate and prioritize the areas where they influence nature. Using data from drones, satellites, and ground observations, they can generate metrics and insights, which are in turn converted into business risks and opportunities for these companies to act upon and disclose to their key stakeholders. We have a seat at the table. We are part of building a global framework for how companies should report on nature. And this week, we are going to the COP15 Global Biodiversity Conference to interact with global experts and further establish our leadership in this field. And we are not just an idea. We have $500,000 in revenue this year, and next year we aim to triple that number. Recently, we closed a $100,000 deal with a Global 500 company, and earlier this week, another Global 500 company in the energy sector reached out confirming they want to work with us on the same challenge. Our initial target market size is $5 billion, based on the 49,000 companies in Europe alone, which are required to report on nature as part of their financial disclosures starting 2024. And we focus on working with companies in the energy, mining, and food and beverage sectors. We make money by selling software, data, and analytics as a service, and we have validated healthy margins in our early offering. But what makes all of this possible is our team, with people from 8 countries in 4 continents, supported by a global network of leaders across sustainability, finance, and science. We are raising $1.1 million because we want to move even faster, and we have the majority of that already committed. My name is Kolbeinn Hilmarsson. I am the CEO and co-founder of Svarmi, and I came here all the way from Iceland to put nature on the map.
Hello, how are you? My name is Gerardo, and I'm the founder and CEO of Pagaloop. At Pagaloop, we help business owners pay, get paid, and extend cash flow using credit cards to finance expenses like rent, payroll, and suppliers. So recently, we launched the app, and we got $70,000 on monthly recurring revenue. We're growing at 21% on CMGR. We got more than 1,000 users, active users actually, using the platform, and we have more than $1 million on total payment volume. We got a market opportunity of $60 billion, yes, $60 billion, that is made of 16 million SMEs that are across Latin America that are ready to disrupt this market. We are serial entrepreneurs, graduates from HBS, MIT, and we just went to Y Combinator in winter 21. We have major partnerships set up already with Visa, Amex, and HSBC. Thank you. We're Pagaloop.
Hello, everybody. I'm Dushko Keles, and I'm the founder of Happy. Happy is Robinhood made for Latin America. We want to democratize access to the stock market, so anybody from LATAM can easily invest in stocks, ETFs, and cryptos with no minimums and no commissions. We launched 8 months ago, and we have been growing 37% a month, our investors in the platform, to over 15,000 of them already. Plus, we're managing over $8 million in assets under management. Our goal is to capture the 85 million millennials that are connected to the internet and have savings in the region into our platform, a market opportunity of over $6 billion. Finally, we're the right team to do so. My co-founders are software engineers that come from some of the top tech companies in the region, like Rappi and Globant. And in my case, this is my 7th startup, and my previous experience was a COO of the biggest micromobility company of Latam, where I managed over 2,100 employees across 7 countries. We are happy. Thank you.
We've all been there, right? Maybe you're like my co-founder who missed a home run ball over his seats at an Astros World Series game because he was waiting in line to get a hot dog and a Coke. Or maybe you're like my wife, a nurse at MD Anderson, where personnel on average spend 30 to 40% of their time just waiting for their food. We can't seem to avoid these lines. But lines are just a symptom of a much bigger problem, the operational challenges and inefficiencies behind the counter. I'm Aaron Canopi. I'm CEO. You don't want me being CTO. CEO and co-founder of Rivalry Technologies, where we're modernizing that order fulfillment process. Now we do this by giving the guest, the consumer, a platform. They can order for delivery, they can order for pickup, and we also have a kiosk platform to let them self-order. And then we tie deeply into the ecosystem of our clients with both our operational best practices, our software, and our software integrations, which creates a holistic platform that gives them streamlined workflows, advanced reporting and analytics, and it also allows them to just manage their large, complex food operations a lot better. We got started in sports and entertainment, but we've been rolling out to other verticals, such as healthcare, higher education, business dining, and leisure. We have a customer-facing app. We also have a lightweight operations app that allows for day-to-day management of the operation. We have a management portal that allows for the heavy lifting, such as venue creation, menu creation, traffic control, all of the analytics and the reporting. And recently, we started rolling out our self-order kiosk system in partnership with Samsung North America. So speaking of partnerships, we partner with some of the best in the industry, like Tickets.com, Baseball Advanced Media, a whole host of well-known payment processors, point-of-sale systems, inventory management platforms, so that we can serve some of the best in the industry, like the New York Mets, the Boston Red Sox, or locally, Houston Methodist, Jimmy Buffett's Margaritaville. And we do this in conjunction with those operators that serve a lot of these industries, like the Aramarks of the world. So we started out by attacking the $20 billion food services industry for sports and entertainment. We're now rolling out into that $153 billion healthcare industry. Also, we can continue our attack on the total $535 billion market for food services that's rapidly shifting to mobile. Now, given that we've got such a broad and capable system, we compete with a few people. We compete with simple fan-facing apps for ordering food. We compete with the delivery companies. We compete with ERP systems, and we compete with some point-of-sale systems. But the great thing is that none of them focus on what's going on behind the counter, helping them increase that throughput. So we started building our company in 2018, ratable revenue in 2019. Something happened in 2020 that impacted live sports and entertainment, but that post-COVID paradigm shift towards mobile convenience has really shown itself in our numbers, in our sales, in our TMV through the platform, and through our sheer number of events. Our revenue model is very simple. It's licensing agreements, typically 3 years at this point, and then we have a transactional fee on every order that goes through the platform. And we've got the data to back it up as well. At Houston Methodist, we were able to increase sales 68% year over year, and we grew the average order value by 113%. So we over doubled what they were doing before on the per order basis. Boston Red Sox, we grew revenue by 118% while increasing their throughput 58%, and again, increasing that average order value. And we couldn't have done this without the team. We've got an established stable of great executives, entrepreneurs, and experts helping us grow this to the next level. Again, I'm Aaron Canopi, CEO of Rivalry Technologies, where we're modernizing that order fulfillment process, helping you all to save time and skip the line. Thank you.
Let's give it up for the founders. Awesome job, guys. Look at this group up here. My name's Joel Carter, and I am a managing partner of the Softeq Venture Fund, and I couldn't be prouder of this group of recent graduates from UCLA. Just take a look. These are mid-career professionals who are dissatisfied with the current state of the art in their industries, and they said, I'm going to fix it. And they said, maybe I need some help. So give it up for these founders and their pitches tonight. This was the same pitch that we saw on day one of the Venture Studio, right? Maybe not. But I want to see by a show of hands, who's from Houston? Who lives and works in Houston now? JR, you taught me this trick. Who's from Texas and Houston? Who's from the United States? Who is from outside of the United States? What does this look like? This looks like Houston, Texas, the most diverse city in the United States, right? So these guys have come a long way. We've not just put them through a 3-month pitch deck building. We've surrounded them with all the other aspects, a 360-degree view of building a business. It includes intellectual property, go-to-market strategy, product market fit, sexy things like insurance and accounting, and all the other things you need to build an investable business. These guys are investment ready, and you've seen what they have, and you've seen what they're asking for. I'm going to take this moment to excuse them. They're going to take off Dusko, lead the crowd out. These guys are heading down the street to Fleming's restaurant, and I'll tell you more about that in a second. So I have a couple more things to talk about before I excuse you to the cocktails and dinner. First of all, I just want to remind you, the model here is unique. We have a $50 million venture fund that's operated by Brett Sirkowski, general partner, Chris Howard, general partner back here, Billy Grandy, he's probably herding the sheep, and myself, and Payal Patel, our principal. Where's Payal? Thank you, Payal. The staff of the Venture Studio is quite lean. It includes Payal and Billy, and also Dave Matthews, our CTO. Where's Dave? Dave? And also Robert Campbell, ex-Jumana and Bain Capital consultant extraordinaire, we are working with these guys on their business on a daily basis for 3+ months. So thank you to the fund partners and the studio. We have the Venture Fund. We have the Venture Studio, which is this 3-month intensive program where we vet their business, coach them, and fill the gaps. By the way, we're all operators. We have built multiple startups. We have multiple exits, and we have multiple epic explosions on the launch pad, and the scar tissue to keep these people on the straight and narrow and give them a better chance for success. Then we also have, backing that, 450 engineers that are building the products for enterprise that scale So between the fund and the operators, the studio and the engineering, we deeply de-risk these investments. So what I saw here was pretty impressive. I hope you agree. When you surround that with the de-risking that we provide, we think these are great alternative investments for your portfolio. So here's what's going to happen next. A little housekeeping. We're going to hand you all a map to get 1.5 blocks from here. People have gone the wrong direction. 1.5 blocks from here is a great restaurant called Fleming's. The startup founders are already on their way to Fleming's because they each have a demo station set up at Fleming's. We're going to do about an hour of happy hour, mixing, questions, answers, everything you want to know, meet the founders. Then we invite you to hang around for dinner. If you can only come for 10 minutes, come for 10 minutes, meet the founders, and go about your business. But we invite you to stay for the evening. We will have a very nice dinner at Fleming's. And it's always interesting. We never know what's going to happen. Sometimes a party breaks out. So we invite you to come meet the founders and see what breaks out. So thank you for coming. We really appreciate it. And we'll walk down the street, get your map, and we will go directly down to Fleming's if you're able to join us. Thank you.